Good afternoon. This is the Elliott Wave daily update for the S&P 500 being recorded on Monday, November the 10th at 1:50 p.m. Pacific Standard Time. It was a productive day if you were bullish. It was a productive day for the wave count. And so I'm just going to dive right in. I'm here on the hourly chart. And this was Friday's low. So we reached 66.55 on Friday at 12 noon Eastern. Today at 12 noon Eastern, let me go right up to it, we reached session highs at 68.65. So we were 200 points. 200 points. Actually, that wasn't. This was the 9 a.m. record. No, that wasn't even it. Where is my 9 a.m.? There it is. 9 a.m. Pacific, so 12 noon Eastern. Today, our high was 68.41 in the ES. So again, the ES rose 104. Well, it's still trading, so it's up 104. The cash market, the cash was up 103.63. Those are large moves in the S&P. Now, let's just kind of review how I left this, what I talked about this morning, and what we saw. So over the weekend when I did the podcast, I talked about how that I was sticking with this fourth wave, expanding diagonal for the fifth wave, the minute fifth wave going up. And I held on to it because, and I explained as to why, that it hadn't broken any rules. In fact, it traded perfectly within the rules. Well, the first one being is that this particular rare Elliott pattern needed to have to be a diagonal, and in the diagonal triangle in a fifth wave, an ending diagonal in a fifth wave position after a long and strong bull phase, which definitely this particular one has been active since October of 2022. So 3 years. It's been in the making for 3 years. And we can go back a lot further than that. But this particular leg of it, the intermediate fifth wave, and then subsequently after the minor fifth wave, and then after the minute fifth wave. So minute fifth wave has been in progress or underway from October the 10th. So 1 month later, right, we've gone from 65.91. Well, we reached a high much higher, right? We reached new all-time highs back on the 29th of October at 69.48. But then today we got up to 68.64. That was the high from today. And that's after hitting 66.80. I think it was. So it is. Yes, 80 on Friday. So again, interesting that it continues to follow what the pattern should be doing. So as I left it, I said, I'm keeping it in this ending diagonal fifth wave because it didn't break any of the rules. And as I had anticipated that once the low was put in, the market should launch off of that level, rise strongly, which it did, right up and including the bell. Since there's no Globex on Friday afternoon, once that 5 p.m. time finished, then that was it. We gapped up yesterday in Globex. The cash market gapped up today on its opening, and the market just continued to rally. Now, those all fit the scenario that I had pegged for once we got into Minuet Wave 5. The market should start to rally strongly. And I use the same phrase, and not look back. So basically, we're going to get little pullbacks, but nothing as if, okay, high enough, we're going to top and we're just going to reverse this position. We're going to reverse this direction. Nothing gave us that hint. So now coming into today, I kept an eye on volatility because what I talked about this morning was that if the market, both the futures market and the cash market, could get above the volatility trigger, which, by the way, in both came in pretty low in terms of where they got put in today. For the SPX, the volatility trigger was 67.30. Well, it had closed on Friday at like 67.28, 27, somewhere in there. So hitting 67.30 was going to be pretty easy. In fact, it kind of gapped through and above it. So that was that volatility trigger. In the ES, the volatility trigger was 67.53, which again, we gapped above it yesterday and kind of thought we might go back and test it, but we didn't. So coming in today, we were already above the volatility trigger. So what I started to pay attention to was vol, the VIX, which they were already starting to sell, but they weren't doing it with any intensity until the cash dropped a little bit more quickly. That then signaled, and here again, in the S&P, it really started to kick in once the S&P got above 6,800. Now, it was already above the volatility trigger, so at 6,800 was large gamma 3. And that would have been 68.23 here in the ES. It did it. It decided to put in a correction, came back down below it, stopped that selling of the VIX, but then we just started to go again. And when we did, we came back above it. We came back above 68.23 and we kept going. So that's basically when the volatility trade, the risk on trade, took over. And if I just kind of open this up so we can see these bars, there was the first one, there was the second one, and that was that secondary break. And that's when it all started to catch, and we didn't turn around between then and now. We've had no sizable anything pullback. I can break it down, put it on the 15-minute chart. Yeah, we got some in between here and here and here, but of to be able to mark in terms of an hourly chart, none. So again, I just trying to put a count to it as well. And as best as I can come up with, I have come up with 1, 2. These were small, very, very small. So I put the 2 here. And actually, it could be 1, A, B, C, 2. I could do that as well, which would lower our targets for going up into the third wave. And I actually may, because it's 3 down, 3 up, and 5 down. So I am going to do that. I like trying to be as accurate as I possibly can to each individual move. So it's A, B, C. And again, I've discussed this several times where I believe that I never used to see, I never used to see irregulars, like irregular B waves in a wave 2 position. Yes, it's possible it's not breaking any rules because wave 2, of course, does correct and then it's back below. But going up and creating a new high above 1, but then sliding right back down, which is exactly what it did, doesn't break any rules. The rule for a wave 2 is that it cannot exceed the starting point of wave 1. That's the only major rule. So again, there we have it, didn't break it. So I'm going to leave it like that. It changes a little bit what our expectations for this next wave up, which is wave 3, which I think is well underway now. And I'm going to have to wait to see how this is all going to count out. So we do have some decent on the 15-minute chart, it looks like we have some decent turns, like right up here at this top, which could be nothing but A, B, and then working a little bit of a C wave, which could be, again, 1 of 3, 2 of 3, 3 of 3. So if we can get that done, boy, then tomorrow gets to be another, or even in Globex, gets to be another really great upside move, right? Because then what are we looking for? We start to run our fibs here. This is going to be for minuet wave 5. Minuet wave 5 would be equal to minuet wave 1 at 68.85. Not going to finish it, but I'm leaving it there because it should create a pause, should create some type of move where it's like, okay, we're going to go here, then we're going to stop, look around, and go back up to here, but still continuing to break. Because I think that wave 3 should come at least to 60 to 69.70, because again, wave 3, I'm looking for it to be a little bit longer than wave 1. And so I needed to get above 69.65 to achieve that. So not that much, but I'm looking for it to get above there, put in wave 3, come back down, put in wave 4. But I also would not be surprised if wave 3 got itself closer to and started testing 7,000. Now that, you have to admit, would be pretty amazing that 2 days after reaching that low, where everyone was convinced that it's just going to fall through the floor now, that we're all turned around and giving a test of 7,000. Pretty amazing. Not in terms of the wave pattern itself, just in terms of like, wow, that's a lot of selling and a lot of buying to kind of achieve both of those types of moves, but we did it. And so here we are again, moving up. And those are it's a little bit of a cluster right there, but I don't think it's going to finish the third. But I think we get a little bit of a pause, maybe a little pullback, and we go back up. This would be one area where I think we could, but I think we need to get above 69.65, which again is that minute fifth wave 0.618. So minute 5 would be 0.618 of minute wave 1 at 69.70. I'm not looking for it to finish there because we're not close on our 5 waves up. So, but I think we can pause. Finishing, I think we can do wave 3 up into here. And again, in terms of the minuet fifth wave, 1.618 of wave 1, of minuet wave 1, it's 1.618. 5 would be 1.618 at 7,028. Then this third would be 1.618 of the first wave at 7,063. So that remains a pretty big contender to contain this third wave. Where are we looking? We continue to have that. As I demonstrated this, showed it this morning, it's still there. Now, though, but you're seeing how can we get there quickly? Well, here's how. So now, what are we working towards? Part of what today is getting credited, or what's getting credited to today, is the fact that the Senate did decide to pass a bill that would reopen the government. There's all kinds of political talk about it, but I had been discussing this yesterday and again this morning, that it could be a strong enough catalyst to just really feed the upside, which it was. So I think that once it becomes a reality, we might just continue. Other things in motion were the actual levels this morning. In the S&P, we basically, 68.57, we kind of started, we went through the volatility trigger, we went through large gamma 3, we went through a couple of combos at 68.26 and 68.73. And so, no, I did not do 68.73. I take that back. So we went through one combo, tested another. So strong move, but coming out of the expiration on Friday tended to space out the gamma levels. We're going to see them get all tightened and jacked around again between now and what will happen by Friday, and then going into next week as well. NVIDIA got real close to giving a good old test of 200 again. In fact, let me just see, because they're going to put it out here. They're bringing it down a little bit. So the high today was $199.94. Quite the move. When on Friday, I watched this thing trade at 180. So a 20-point move, basically an afternoon and a day. I think it's pretty incredible. And that is another reason why I started to feel that could fuel and lift this fifth wave straight up. And that's kind of what's happening as well. Other stocks that seemed to do very well today, well, we had Tesla up quite a bit, closed up 15, getting sold a little bit now. NVIDIA up strong. What else do I have? Netflix up very strong. Micron up strong. Microsoft up strong. Meta, medium. Google up very strong. And Broadcom did well. Amazon did okay. AMD did well. And it was Apple. It was like, wow, you just kind of, it got above 270, got above 271, and then just kind of decided, nope, that was it. And they brought it back down below 270. So again, nothing too out of the picture or concerning, let's say. The NASDAQ is finishing up the futures at 554, up 554, almost 555 bucks. That's strong. That's a big rally. Now, I want to just let you guys know that 70% of this rally was by the hands of the top 10 stocks. Over 70%. When I add up the weighting in all of that on a percentage basis, that what the moves in NVIDIA, Apple, Microsoft, Amazon, Google, which has two classes, Class A and Class C, Broadcom, Meta, Tesla, and Netflix, top 10. Amazon counts twice because it has a Class A and a Class C. And combined, it contributed over 10%. Its weighting to over 10% to today's move. Combine all of those, and it was over 70%. Was 10, well, actually 9 stocks, because Google is 2. They just have different classes. 9 stocks that were up pretty massively. So again, when that's what we're dealing with, it's like it doesn't take very much. It really doesn't take very much because of how things are weighted. Now that we dropped back into, I believe, risk on trading, we're going to keep tabs on that by keeping an eye on the volatility trigger. If we come back down and we trigger the volatility trigger, whether overnight or whether tomorrow morning or whether tomorrow during the session, it's going to start to swing things back again. And this is the other point that I need to make, because now that we're getting up towards what I believe will be the ultimate high to put in a much longer term high, and a much larger correction can begin. So I'm thinking that, this back and forth, but I think once we start getting back up to new all-time highs here, okay, so that's anything above 69, 66, 67. Then we're in new all-time high territory all over again. And definitely above 7,000, I think we can see this thing swing around a lot, because that's just a level to say, wow, that's, here we are touching the moon, so to speak. So again, I think we'll get a lot more volatility involved in terms of the premium in an option, the premium, yeah, that'll be a big ordeal, but it's also going to fuel a lot of the trading, to be honest with you, because the dealers have to, if the public or if just the investors are buying the call, so in other words, they're selling the VIX, they're buying the underlying volatility, and that is via buying the premium in the options. That's volatility. So then again, so it's implied volatility actually. So having that in play could flip back and forth because I think it becomes very sensitive to the volatility trigger now. So when it gets broken to the upside, it's going to move a little bit quicker. When it gets broken to the downside, it's going to maybe switch people's minds very quickly. Why? Because we're sitting up at all-time highs. So that's one reason why I think we're going to start to get some real play. And we'll see it in the futures market as well. You'll see it in the options where they'll just kind of pop. They'll just do it. It'll just kind of go. All right. Now that the government, I don't think it's officially open, but tomorrow is Veterans Day. It's a holiday. The bond market is closed, so treasuries are not engaged. We have one number that's not presented by the government, but it's the NFIB Optimism Index. I'm not really aware of when this thing really produced some type of a reaction from the market. On Wednesday, we have nothing except 6 Fed officials, from president to governors to, that's it, are giving out speeches and talking on Wednesday. It's Thursday. If we get this government open and they can get these figures compiled, then maybe we'll get our initial jobless claims and the consumer price index. Now that, if we can actually get these numbers back, folks, then I'm expecting that we're going to get some volatility. We're going to get these volatile moves prior to the market. But if the CPI continues to show inflation, then I think maybe, it'll be interesting. It will definitely be interesting to see what are they going to react. Are they going to continue to buy, or are we wherever we're getting to between now and Thursday morning? How is this reaction going to come in? So that's what I'm saying. Be prepared. Be prepared for an increase in volatility. If you're running positions and you're putting on something that's a little bit leaning more to the long side, in advance of that number, if it comes out, by the way, if it doesn't come out, same story, second verse, same as the first type of thing. So again, we have to wait and see. If we're going to get the numbers, it's going to be interesting. If we're not going to get the numbers, well, then it's business as usual. That's like we've been doing. All right, I am going to finish that right here. So again, still looking for it. And strength to the upside does not suggest that we're not going to get any pullbacks. We did get one, and it came early. It came at 10 o'clock. And that was it. That was it for the balance of the day. There was some internal, but nothing of any size. And they may end up staying that way if risk-on trades really take hold, which they might again tomorrow. That might spread to other stocks. So we'll see. And that's going to be at our next update will be tomorrow morning.